Wednesday, May 22nd, 2019, Maneco 64, home of alternative economics and contrarian views. This morning I want to touch upon Deutsche Bank. Many of the viewers have been asking me what I think about Deutsche Bank. I've made quite a few videos in the past about Deutsche Bank, some about 2.5 years ago when the share price was drifting towards 10 euros. And all the numbers I talk about Deutsche Bank, the share price, are in euros. The ADR trades in dollars in the US. The euro price is lower than the dollar price, of course, because 1 euro buys more than $1.10. So you have to take that into account. So every price I talk about here, as it relates to Deutsche Bank, you have to multiply it by the euro-dollar exchange rate. But yeah, September 16th, 2016, I made a video, Deutsche Bank and the Derivatives Time Bomb Part 1. 10 days later, I made another one entitled the same, Part 2. Does this mean that there's no time bomb, derivatives time bomb? That I was wrong, even though this was 2.5 years ago. Very difficult to predict when these things are going to happen, but they will happen. I think cycles, I guess, are important. I was just listening to an interview Greg Hunter did just a few hours ago. It came out with Charles Nenner. He's looking at the Deutsche Bank as well. I'm not too sure what he thinks of the cycles at Deutsche Bank. He was talking more about prices that he thinks are important. And the important thing to remember about Deutsche Bank for me, and if you listen to my videos that I did 2.5 years ago, I'll put them up in the cards and below in the description if you want to listen to them, is that it's just not a Deutsche Bank problem, but it's a too big to fail problem. All the banks, like Deutsche Bank, they're called SIFIs, systemically important financial institutions that are overseen by the Basel III, how can I say, rules, the BIS, and the major central banks. These are the banks that are too big to fail, and Deutsche Bank is one of them. Personally, I agree with Charles Nenner. He said, you know, they're just the ones who have been got caught. And I think the reason why Deutsche Bank has been able to go on for so long is that the credit cycle has allowed them, you know, the tide has come in, so it's kept everyone, people from seeing what's really underneath the water, so to speak. But I think right now things are not looking great, as I have said in my last few videos, for the economies all around the world. I mean, just to give you an example, here in the UK, yesterday there was some headlines that a restaurant chain collapsed. Jamie's Italian restaurants. Jamie Oliver is a famous chef here in the UK, and it's just come out yesterday. Jamie won't be the one looking for a job and struggling to pay his bills. Tearful staff hit out as Jamie Oliver's restaurant empire, including Jamie's Italian, and 15 collapses with 1,300 jobs at risk. And then you go to the end of the article of the Daily Mail, and it says, bloodbath on the high street, how shops went from bustling to bust. And it goes on to say 2018 saw one of the worst years of the UK high streets, with retailers shutting their doors and plaguing homes across the country with many job losses. So you see they go through the whole list here. Carpetright, Toys R Us, House Fraser, Maplin, Mothercare, Pound World, Homebase, Marks and Spencer's, HMV, LK Bennett. And there's also the story of Thomas Cook, which is a holiday company that provides holiday packages. They do chartering, airplane charters. They fly people to holidays. This is the most recent we got here. Thomas Cook reassures holidaymakers after shares plunge. Mark Ritson of Marketing Week, talk of crisis could be a death spiral for Thomas Cook. So, and we've seen Metro Bank be in trouble as well. And we've seen Australia yesterday, talk of rate cuts. The ECB, they've gone off, raising rates again. The Fed has gone off raising rates again. Forget about the Bank of England, they're not going to raise rates. So yeah, it looks like the credit cycle is turning. So yes, Deutsche Bank could be in trouble. I think Charles Nenner talks about a level that he's looking at. I think at 6.5 euros. I think he got a bit confused with Greg Hunter. Greg Hunter was talking about dollars, dollar price. Charles Nenner, I think, was focusing on the euro price because he's based in Holland. But just look at a couple of charts here of Deutsche Bank. First, the weekly chart. You can see going back to, wow, 2000. So it's almost a 20-year-old chart. So we're right on the lows here at 671. That was the close yesterday of Deutsche Bank in euros. So not looking great. And I think that was the level Charles Nenner was talking about. He was talking about 6.5 euros. And we're pretty near there. And then you look at the daily chart. Yeah, I mean, we've broken the low from last year. Just around Christmas time, the low was around 670, 667. Yesterday, the low was around 660 in Deutsche Bank. So let's see, 658. So it's not looking great. As I said, the derivatives is the whole problem. I think for Deutsche Bank, you need to go back to the 90s when they took over Bankers Trust, which was a huge derivatives investment bank in the US. Why do they do that? Well, because Deutsche Bank wanted to be a primary dealer with the Federal Reserve Bank of New York. I think that was one of the main reasons, but that has plagued them, in my opinion, since taking over Bankers Trust. There's other things as well, the '08 crisis. And they're reported to have 50 trillion euros of derivatives. And that number is huge, of course. But one thing I wanted to point out is that, and also all the other European banks, Charles Nenner said that they are probably in trouble as well. And I agree with him. I mean, we've got a zombie bank in the UK called RBS, which is 2/3 owned by the government. That's not looking great either. But I want to point out that in the US, things are not too much different. I've gone to the Office of Controller of the Currency. And I'll put this, it's their latest quarterly report on bank derivatives positions. So everything is there. I'll put the link below in the description. And you can see here, JP Morgan Chase, they have $60 trillion of total notional derivative. So pretty much the same as Deutsche Bank. Citibank, 42 trillion. Bank of America, 18 trillion. And the one that raises questions is Goldman Sachs. They've got almost 34 trillion. And why is that? Well, because they're, the assets they have and their market capitalization is a lot smaller than people like JP Morgan Chase and Citibank. Do you understand why now maybe Goldman Sachs is trying to get into, banking, deposit banking with their Marcus account, which I've spoken about. So be careful. They've opened here in the UK. It's an online banking called Marcus, and they're trying to give you a little more interest than the normal banks. But I wouldn't hold too much money with Marcus. Because that 34 trillion in derivatives is huge. So what I'm trying to say here, yes, Deutsche Bank has been a zombie bank for many years. I don't know when everything is going to kick off, but Deutsche Bank is just a symptom and a domino of the whole system. So when Deutsche Bank goes, watch out. And that's why you need to be protected with physical precious metals outside the system, in my opinion. Keep some cash in the bank if you have to. Be careful with the limits, the insurance limits in the UK, it's 85,000. Joint accounts is double that. US, you've got the FDIC. But if we do have a systemic crisis, will they be able to really pay you? This is what you need to think about. Yeah, keep some cash there, but have something outside the system to have a bit of peace of mind. And I'll show you here some other charts from the office. Oh, so this is a government statistics, the OCC.gov website. I'll show you some more charts from that report. So you can see here, this is derivative notional amounts by type, insured U.S. commercial banks and savings association. You can see that we are actually at higher levels than we were during the crisis of 08. Yet we're lower than it was in 2011 and 14, but we're actually pretty. So has anything really been done? Have these banks really cleaned their act? I'm not too sure. So there you go. They have decreased their credit derivatives, but the total notional amount of all derivatives is still really high. What about the markets? Let's finish off with the markets this morning. It's 7:23 a.m. London. Yesterday the markets rebounded quite well, the stock markets. Just before I go on to the markets, I recommend the Charles Nenner interview. I think it's quite interesting that he said he expects the stock market maybe to rally another few percent over the summer, but that you need to be out of the stock market by July. He thinks precious metals have a good prospect for the next few years. He thinks gold could be go up to 2,500. He actually thinks we're going to have a deflationary, and I think by deflationary he means the financial assets. He thinks we're going to have a deflationary implosion or collapse. Excuse me. And with the stock market and even the bond market, now he had been bullish, the bond market, the last 12 months, but he sees yields going up as well the next few years, mainly because of a deflationary collapse. During a deflationary collapse, you'd think, a recession, that people would be buying bonds, but he thinks that this is going to affect credit, and creditors are not going to be willing to lend to people as cheaply. I've made videos about the bond market. I think the bottom in yields or the top in prices was July 2016. That was like 35 years from the bottom in bond prices in 1981. So I think we've been in the bear market in the bonds since about 3 years now. Charles Nenner is looking more at shorter term cycles, but he sees bonds going up, but bond yields going up and prices going down now. He says the only thing that can stop that if there's a major war or conflagration, people will go to treasuries and other bonds for safety. But yeah, so he's positive gold and silver as well. He thinks silver will outperform. So pretty much what I think. Highly recommend that. So 726 right now, spot gold, 1272.70, down a couple. I think we got down below 1270 yesterday. Spot silver down 3 cents, 1441. Range has been 1440 to 1450. The Dow right now is down 22, 25,850. The S&P 2860 down about 3.5. So pretty quiet here. NASDAQ 100 down 0.25%, 74.33. The pound is below 127, down about 10 pips, 126.95. Euro 111.54, pretty much unchanged. Yeah, don't forget when you quote the euro dollar rate. FX rate, that means 1 euro is $1.1150. Dollar yen right now is 110.47, unchanged. So pretty quiet here, the currencies right now. and the dollar yuan is unchanged as well, 693.60. Crude oil down a bit this morning, down about 1%. WTI is at 62.45, down 1%, and Brent is at 70.96, down about 0.8%. Deutsche Bank, yeah, it's still a zombie bank. Derivatives are still the problem. At the moment, the powers that be, the central bankers, the regulators, are still being able to keep this game going. But if things are going to go south, Deutsche Bank is going to be at the forefront in the beginning, but it's not going to be the end of things. It's just going to be the beginning of the end, I think. I guess recently there's been talk about merging Deutsche Bank with Commerzbank, another big German bank, and that failed, and that's not a good sign that they weren't able to get those two together. If you enjoyed this video, make sure you hit the like button, subscribe to the channel if you haven't yet, share this video far and wide if you think others would enjoy this kind of content, and you can follow me on Twitter, Steemit, and on DTube as well. I wish you all a great day. Take care. Bye.